right click. I think maybe it's my processor. Like, look at this. I can't even get the speed test going. Wow, that took a long time. All right, this is going to be a problem. Ridiculous. Sorry, guys. Just one of those days I can't get the world to work. All right. Well, anyways, it's a Thursday. It's crazy. Weekless, jobless claims the end of the world. Everyone's losing their job. Oh, no. Thank goodness we're Forex traders. Because we can make money on the way down. We can make money on the way up. So pick a direction and let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Nice to meet you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Visit TradersWay.com. Open up a demo account today. Download MT4 today. If you want my chart templates, they're in the video description below. Open up a demo account, play some trades. Check out the fast execution speed, the narrow spreads, and the huge swaps, and world-class customer service. And maybe, just maybe, they can earn your loyalty and respect. So when you're ready to trade real money, Traders Way will be your execution partner. TradersWay.com. What else? Welcome to Forex.Today. We're a community of over 12,000 people, and I'd like to welcome the 700 people that have recently become subscribers just in the last couple of weeks. Whoop, 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 whoop. Jonathan says Traders Way also accepts crypto. Oh, yeah. Okay, absolutely. So, thank you for being part of the community. Ask questions, take notes, get involved. I will teach you technical analysis, fundamental analysis. We'll address trader psychology, all that kind of stuff. You're the boss. I'm just a humble currency trader that's maybe 15 or 20 years ahead of you. So, I'll teach you everything I learned. So we got weekly jobless claims. Some people say 2 million people lost their job this week. Other people say 8 million. No hope. I'm not the boss. I'm not the boss. I'm just here. Cool. I just am. Namaste. So, yeah, so some people say 2 million people, some people 8 million, but anyways, millions and millions and millions of people have lost their jobs this week. We'll find out how bad it is. Okay. Oh, man. Thank you, man. ManCon. That's a cool name if that's your real name. Kind of like it. Yeah, you can't argue with that, Highlander. All right, so anyways, should be pretty good. Should be very interesting. Now, let me remind you that news is not fundamentals. News are events. Fundamental analysis has to do with partially to do with the trend in news, but more importantly to central bank response to news. But the thing is, we've already responded. We've already spent trillions of dollars. We've already made loans available. Everyone already knows it's bad. So if it's ridiculously worse than we thought, or ridiculously better than we think, like only 1 million people lost their jobs, or maybe 12 million people lost their jobs, then there'll probably be a policy change at some point. But that's not likely because that's not on trend. So always remind yourself, fundamentals analysis is not the news report. That's just an event. That's a data point within fundamental analysis. Okay? So we'll see if there's any radical difference from what's expected. But looking at like this daily chart, for example, you know, we're at the middle of a range. This market technically is not overbought, not oversold. What do you think? A good opportunity to make money? Or would you rather have this at an extreme? Now Anthony Liu says, "Hey, hyperinflation's on its way." One of the mistakes I have done in my life, and there are many, that belly button tattoo that I got in the 90s, big mistake. Anyways, one of the other ones I did is after the 2008 financial crisis when the Fed pumped trillions of dollars into the market, I wrote an article, I think it was published in CNBC.com, about hyperinflation. Whoops! I said a hyperinflation's on its way. If you're going to pump that much free money into the market, eventually we're going to have high inflation. And we never got inflation at all, not even moderate inflation. In fact, I was so wrong. Central banks in the world were begging for any kind of inflation. Like, could we please get 2% inflation? And they couldn't even do that. So, Wayne, thumbs down. But that was so long ago, I don't think there were even thumbs down, not even on Facebook. But there you go. Well, pure mathematics is trash. Cash is trash. Well, first of all, that's clever. But cash is used because it's convertible. You want to convert your cash into something that provides a return. So we got to get going here for the news. But cash in itself is worthless. You can't eat it. Okay? What is money, by the way? It's a medium of exchange, a store of value, and a unit of account. Do you guys remember that from the fundamentals account? Fundamentals course at FX Bootcamp? So none of that says money. Okay? By the way, so one of the things we've talked about is how the Treasury, not the Fed, the Treasury's increased the M1. So that's kind of interesting. Remember M1, M2, M3? Also, I believe from the fundamentals course. So I'm just trying to show you here, Euro USD is not overbought. It's not oversold. It just is. So I don't know if that's interesting to you. It'd be M1, but not M2 or M3. Well, it really depends, actually, because my wife said, hey, she logged into our bank account yesterday, and there was an extra $3,300. The government put it right in our bank account. So in that case, it never was M1 and went straight into M2. Isn't that great? Didn't even want it. Don't even need it. Oh, thank you, government. Just give everybody money, regardless of need. Hey, great. I got $3,300 yesterday. Cool. So we don't know what to do with it. Thank you, government. Cool. Trump bucks. Yeah, but anyone would have done it. This had nothing actually to do with Trump per se, but whatever. So, but what I'm saying is because that went directly into a checking account, that's M2. No, wait, no, sorry, a checking account is M1. I think it went into our savings account, so the savings account is M2.
Initial jobless claims, you're seeing a little heavier market here. S&P futures just up by about 6 points. The dollar losing a teeny bit of steam as well, but euro dollar still in negative territory. Switch up the board. You can even see that reflected in BTP as we had a sell-off yesterday. Christine Lagarde seems to do her version of whatever it takes today. Then you see a recovery in BTPs, but the yield's down only about 9 basis points. We were down by about 15 moments ago. All right, economic data dropping right now. So initial jobless claims coming in at 5.2.
5.2! Woo! Woo! 5.2. That's a solid number.
Over the last 4 weeks. So 5.2 million. I had heard estimates from 2 million to 8 million. So kind of right in the
Oh, look at her. She's got the same sources as me.
People filing for jobless claims. We're also getting other housing data, which we will discuss in a second. Building permits are down by about 6.8%, and housing starts
crazy,
down,
crazy.
Well.
Oh, well, that changes everything. That changes. Oh, wait, that doesn't change anything.
So initial jobless claims 5.2 million. I guess I would say that they're less than the.
Oh my God, that changes it. Oh wait, it doesn't change anything. All right, cool. So
one of the problems, Alex, is that we don't know how many of these are being delayed. Bloomberg has an interesting story today on how gig workers are not really getting absorbed into the system yet, even though the legislation now allows them to get unemployment.
So if you're a bull on this,
states have to update all their software.
You've got your
them.
up,
plus so many
but you're fighting your way in.
Some states may be behind.
And then up here is going to be your sell
We could
zone.
see this lower level continue for quite some time. But if you're taking the total number of claims to this point,
what is it? 20?
You were looking
24?
at. And I'm just doing the math here. Hold on 2 seconds.
24.
We're at 5, 2, 4, 5. Basically, we have wiped out almost all the jobs created since the Great Financial Crisis, since the low in employment during the Great Financial Crisis in February of 2010. The economy created 22,088,000 jobs.
You know, as soon as you're allowed to go back to Applebee's, the waitresses are going to be hired again. I don't know why they keep saying this. Like, this is even worse than 2008. Well, 2008, people lost their jobs. Like, the job actually went away. These are like pauses.
A few more there because the prior week, when we saw 6.6 million job filers has been revised up to 6,615,000. So the numbers just are so astounding you can't keep up with it. You mentioned housing starts down 22%. That just came to a crashing end. It's the kind of thing we would have blamed on weather before, but obviously you can see the impact of the whole crisis just hitting all at once.
Look at that, almost no reaction.
Highway hit a brick wall.
Yeah, and also February housing starts revised lower as well. We'll talk about that in just a second. One quick thing though, Mike, is that what I'm seeing is the Dow futures up triple digits now, about $1 million. S&P up by 18. So I mean, is this what we're seeing, like the bad data, and we're going to rally on bad data? Like, how do you interpret that?
You know, I think it's probably not the data. I think the data is probably priced in. It may be that the politics is intruding at this point. The markets are looking at what President Trump said last night about coming out today with a plan to reopen the economy. Now, obviously, he can't reopen the economy. A lot of people say that whatever his plan is isn't going to work, that it's really up to the virus and the scientists. But the markets are looking for hope. And so if he's going to do some sort of splashy presentation today about getting the economy open, and they're hoping by May 1st, then
22 million now.
Contributing
All right.
to some of the enthusiasm.
22 million. I said 24. All right. 22
Dow
million
Jones futures
jobs
now up by
lost.
180, S&P
I would
up
say
by
most of
24.
those are actually paused. I wish they would use the word paused. Okay? Now, I suppose the jobs are lost if Applebee's goes out of business, which is possible. If you guys remember Ruby Tuesdays, it was actually a pretty good restaurant. It was all right. You know, it was sort of an Applebee's, a little bit nicer than Applebee's, and but it was over leveraged. And when the 2008 financial crisis hit, it couldn't roll over its debt. It had too much debt. The debt was too expensive. Credit marks were frozen. And if they could have survived another 3 months, credit markets unfroze and they would have been able to refinance or restructure their debt. But at that time, they was frozen and they went out of business. So if Applebee's does that, then Applebee's goes out of business and all the waitresses lose their money. But here's the thing. The government did more in 3 weeks than, or I should say the Fed. The Fed did more in 3 weeks than they did in 13 months back in 2008. So it was much faster. The free money became available very, very quick. And then the Fed put in essentially loans to small businesses to say, hey, Applebee, if you basically need free money to live through the next 90 days, we'll make that available to you. Oh, Greg says, Wayne, I'm surprised you think everything will simply go back to normal. So that's just my opinion, right? So, but that might be from my limited point of view, from my limited life experience. You know, life is fun. I mean, I don't know. So that's how I see it, I should say. I could be wrong, but we might have different life experiences, right? So I don't know. So maybe things look less dire for me. Maybe things look more dire for you. Maybe reality is somewhere in between. Okay? I think actually when we get through this, the economy comes back to normal. But I think the way humanity interacts with each other will be different. So will anyone ever want to get back onto a cruise ship? Yeah, but I think cruise ship industries will change. Will more people work at home? Will more people have flex time? And all that kind of stuff? I really hope so. And then particular to women that typically have to look after children and look after, the elderly, what women need for the workforce is generally more flexibility. A 9 to 5 kind of sucks. Like, for example, they let kids out from school at like 3. Why the hell is that? How is that, right? And why do banks, remember how banks used to like open at 10 and close at 4? You're like, that's not convenient to anybody. So like maybe things change and now suddenly you can work from home all the time or most of the time, and there is no such thing as 9 to 5 anymore. You just get your job done and you do it right, and that allows a lot more flexibility to a lot of different people. So maybe you can have multiple jobs, like, half the time you work at Uber and half the time you do remote programming, and it just works really well because your schedule is so flexible. As a capitalist, I love that kind of stuff. I love it. As long as you contribute to GDP, I love you. And if you have all kinds of ways to contribute to GDP. Okay? So very, let's say, underrepresented people in the economy suddenly have more access to that economy, more access to make money. I love the idea that almost anyone can make money working at home. Now, we're Forex traders, so we get that. But, remember the days when people started to make money like selling stuff on eBay and all that kind of stuff? Well, look, if that allows you to spend more time with your family, spend more time with your kids, spend more time at home and less time commuting, there's a lot of benefits from that. You got money in your pocket, but you're not polluting the air, being stuck on traffic on the highways for 4 hours a day. You know what I mean? So anyways, I think... and then also this idea, what I talked about before, international institutions like governments or like the World Health Organization, the IMF, the World Bank, the United Nations, World Health Organization, all these institutions maybe now can communicate more effectively. You know, if China becomes a little more transparent, if central banks pick up the phone and call each other more for coordinated responses and stuff, I think maybe, and I've said this before, but this is possibly the first time where humanity responded to a crisis, not just individual governments. Now, it started that way. It was a Chinese problem, then it was an Italian problem, and all that kind of stuff. But I think it ended up with just a little tickle of simply humanity coming together to solve a problem. And if we can get a little bit better at doing this, then I think, A, it's a good thing and it was well worth it. But two, we need to be super happy this isn't like Ebola level stuff where you're walking down the street and there's people laying on the ground bleeding through their skin and their eyes and their nose, and their organs are liquefying inside their bodies, and you're like, oh my God, if that was COVID, holy smokes, right? So this is a good sort of wake up call and practice run for something that could be much worse, right? So anyways, there's my thought. So the increase of globalization, as Alex says, and I'm a big fan of that. I'm a capitalist. I like globalization. Okay? If there's a poor family in Vietnam that's growing shrimp in a little tub underneath their house, and I'm eating it, they get money, I get shrimp, everybody's happy. Okay? And again, this idea of being able to work from home, as an entrepreneur, I love the whole idea of it. Okay? Love it. I think that's also good for humanity. Okay, so a quick look at exotics. This still looks like risk off, but we're maybe topping out. I don't know. It could be interesting. You can this is set up for a bull trade, but you can also see we're in a bear zone and off a top like that. So cool. Maybe people were thinking it would get worse. Okay. South African Rand gaining here, which is kind of interesting. So that's a little bit more risk on than risk off, but not really a sell zone yet. Okay. Taking a look at Lira. Lira is still quite weak versus the dollar, or the dollar is still quite strong versus everything. Okay. So we don't, right? So what I'm getting at is we're at some interesting prices in exotics, but no clear change yet. Okay. So like this downward move is a little more risk on than we've had lately. And you can see it's a little bit of a lower high. I wouldn't make a big deal of it though until, unless it does this. And that would be a much better risk on. Right now, it could just be respond to some volatility and then we go back to, and that's risk off. So, right, there's some glimmers, or let's say grassroots of potential change, but nothing that is confirmed as of yet. Okay, so the play is still the play, right? If you're still risk off, this is what you're looking. Okay. If I had $1 million, I'd make 5 million more. All right. Gold is moving. Give me some gold. I gotta move. Give me the gold. All right, let's look at gold. Let's go here. BTC, sure. We'll get there, Barry. Barry. Aussie, sure. I'll look at Aussie. Good with that. Gold is moving. Really? So I look at that, I'm like, Cool. All right, so gold kicking off at top. We already know 1740 is an exit price, so a retest of 1739, like, okay. Dollar gaining strength is indicative of risk off. Oh, thank you, Johnny. You understand that? There's nothing very surprising here on gold. So if you're a bear, you got yourself a nice little double top on something that very obviously, clearly, 1,000 times over is obvious resistance. Now, if you're a bull, you're looking for dips like this, right? But risk off is dollar strong. So right now, that looks like that's how the market wants to interpret the news, but that could be short-lived. So if you are bullish, you're playing the space between the 21 and the 55. Hello? Right? Well, hey, Anthony, I got your feedback. Yeah, and I agree with you. So, yeah, we'll see. I'll make some changes, I think. Barry, why do you keep asking me stuff like that? I don't really understand. And I think you've asked me that question about 5 times, and I think I've answered it 4 times. But I never understand why you ask such things. No, I'm not upset. I'm just like, I don't understand. I've answered it 4 times, but it seems to be incredibly off topic. Okay. What was I going to do? Oh, yeah. We're going to do some Bitcoin. Yeah, and I've answered it, so I don't know why you keep asking. That's all I'm saying. You already know. You sure that you've asked that like 5 or 6 times, Barry? For sure you've asked me that. For sure, dude. Where you been? That's even funnier that you don't remember it. I think you need to wear your ventilator when you're painting a little more often. It's funny, when I had my house spray foamed, all the attic and stuff, he's like, this is the biggest attic I've ever worked in. I'm like, uh-huh. And it took him like a week to spray foam it. And he would have conversations with me, and like we'd stand on the driveway and he's giving me an update. And in mid-sentence, he would stop talking and like an eye would drift a little bit. And then he would resume talking. And it happened more than once. I'm like, oh my God, I don't think his respirator works that well. It's funny, it happened like 3 or 4 times over the week. Just, he's literally talking to me, and then you just... do you cook a lot? Come on, Barry, tighten that respirator, man. When you're spraying that foam, you got to tighten that respirator. Anywho, so we got BTC here. As you already know, this is a risk-off move. As you already know, here's the entry. Very clear sell zone. And check it out. Here's our target. 6445. Beep, 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 beep. Isn't that funny? Well, I don't want to tell you, Barry. If you don't remember, I don't want to tell you. It's a waste of time. You got to be careful, man. I've answered it multiple times, so I don't want to do it again. All right. Barry, you never listen to me. What? Anyways, So if you're a bull, that's what you're looking at now. But the weekly trade plan, guys, if you remember, this is a sell zone, right? This is your roll reversal. And the interesting thing is that sell zone target's right there. Look at that. Okay. So now what? I don't know. Oh yeah. Well, I work at home. I don't work in a skyscraper anymore, so I don't commute. La 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 la. Let it go, let it go. Let it go, let it go. So if you're a bull, this gets interesting because if you mark your lines, you know, what are the plausible responses to this move? Well, you got this, or you have this. That's all that's likely in the moment. No, Barry, I would tell you otherwise. Ba, ba, da, ba, ba, ba. What I really want to say. Let's do some oil, I guess, huh? Wowzer, 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 wowzer. Okay. It's cool, Barry. Yeah, I'm not mad. Amazing now, huh? But what is this worth if you bought it here and wrote it up to there? It looks like nothing, right? That's $1,000 profit per contract. Right? Chip says, if I have an active trade, what time frame do you manage it from? Well, everything begins on a 4-hour, right? So you have to like know where the moving averages are on a 4-hour, right? So if you're a bear, let me clear this out. Delete. If you are a bear, you are selling off the 21, right, on the 4-hour. So you need to know. So if you're here, you need to know where that 21 is, because you're going to do it again off the 21. Or if there's a breach of the 21, oh, that was supposed to be a different color. Man, this drawing tool bugs me sometimes. There we go. Then you know you're in trouble and you need to adjust. So you always got that. So you always got your eye on the 21, which is currently right there. Okay. And then you drop down and you say, well, on a 15-minute chart, where are we on the daily? Daily pivots, let's say. Okay. And then you're probably managing your stop that way. Okay. So I'm typically managing on a, well, I trade on a 5, but I'm probably managing on a 15. but that means I also know where the 1 hour 5 EMA is and the 4 hour 21, for example. I like to pay attention to all these things and then make adjustments. So, for example, if I was short oil and oil did this, I'd be out. Okay? Just like that. Because I know it's got to do this. If I'm a bear, that's what it's going to do. Sell your houses? Why would you sell real estate? Selling real estate makes no sense. You should only own real estate. Okay. So anyways, let's move over to... Someone asked for Aussie dollars, but let's do kitty cat first. La 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 la. So there's the trade plan that's standing. Still seems all right. What's up, BCM? Well, I would never buy garbage real estate. That doesn't make sense to me either. Okay. Yeah, so this 140 is the line that I want to hold. We're at 140.60. So this 140.50 should hold. It's tomorrow's buy zone. Fixing. Oh, I don't mind buying distressed properties, but you don't sell. You fix it up and you put people in it that don't have the same kind of credit or even foresight, and they simply pay the bank for you. Cool. So when you buy real estate, it's free. You have to understand that. When you buy real estate, it's free. Okay? So why would you sell something that's free? You're like, it's just free. And then after a while, you just have free money because the renters have paid off all the banks. So now you just have free money. And now if you want to buy a big TV, you're at Sam's Club and you're like, I want to buy this 65-inch OLED. It's only $3,000. You're like, oh, well, I'll spend the renter's money on that. And you buy it and the TV's free. Like all of a sudden everything is free. Like why would you sell the goose that lays the golden egg? Because you're giving up your golden eggs. Like it just doesn't make any sense to eat. Why would you eat that goose? Right? So anyways, like sell real estate. That's weird. Do you know the richest family, richest British family? No, I think it's London. The richest London family. It was when I was there smoking a cigar in Winston Churchill's chair in a museum. So anyways, that day, the richest man in London died. You know, not foreign money, like they were a British family. And some kid took over the fortune because dad died fairly early and the kid was like college level age, and he inherited the largest stack of cash in all of London. Do you know how they made their money? their great grandfather started buying land in Mayfair, I think it was. But at that time, it was swamp. They were poor. And nobody wanted to live in the swamp except poor people that needed to work in London. There was nowhere else to live in London. So anyways, this guy, he bought up all this terrible, terrible land and built some buildings and gave it to his children. And they built some more buildings and they gave it to their children. And they built some more. They built some more. 600 years later, they still own everything they bought. But each generation would leverage the previous asset to buy more assets. And then the next generation leveraged those assets to buy more assets. And then that generation, and pretty soon all the kids went to all the best schools because now they're filthy, stinking rich. And they went to school to learn how to manage and grow their family portfolio. 600 years later, they went from very, very, very poor but smart to suddenly the richest private family, non-royal family, right, in all of London. And all they did was buy real estate, but never, ever, 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 ever sell. You never sell real estate. You only buy. Okay? Because now your whole family for generations can live off free money and, here's the kicker, asset appreciation. So they might have paid $10 for the land and now it's worth 10 trillion. Plus they earn income. They made him a duke. You know how you become a duke? You're just the richest dude in town. They're like, how'd you like to be duke? Yeah. How old was the kid? I think he was like 22. Well, see, the thing, Gary, if you buy right, and sometimes it's a matter of time, and you might not have time, but you leverage the first one to buy the second one. So, for example, I was teaching a course. Remember, I was talking about teaching you guys a course on how filthy, stinking rich people become filthy, stinking richer. Okay? You buy a $5 million painting. Okay? And then a bank loans you $3 million against your $5 million painting. So now you get $3 million of cash back. So you only spent $2 million on the painting. 10 years later, you sell it for $8 million. Okay? So now you have $3 million profit. So you buy it and you pay yourself immediately. You understand? It only cost you $2 million. And you sold it for $8 million. It's like, it's wonderful. So you buy the painting for $5 million, and then you go buy yourself, you get to put fuel in your plane for a year. And then you sell your painting and you get all that money back. But you understand, like, rich people never spend money. Right? So if you inherited a $1 billion real estate portfolio and your dad worked his whole life on building this portfolio and it's been paid down, you could sell your $1 billion, or you can get a loan to value of, let's say, 7 to 1, an LTV of 70, and you put $700 million in your pocket, okay, and you invest that. Plus, this property is paying you cash flow. And you can walk into any bank in the world and say, I'd like $700 million to buy more property. They're like, hell yeah. Okay. So your $1 billion should be paying you $60 million a year. So any bank is going to lend you on top of that. So you're making $60 million in cash flow off your dad's investment. Thanks, Dad. Okay. And then you go to the bank and say, well, I want to borrow against that. And now you go, right? And then by the time you die an old man, this 700 million is growing to, let's say, we'll just double it, 1.5 million or 1.5 billion. Okay? And this has turned to 2 billion. So now your children inherit 3.5 billion, earning 6.5%, let's say 6% income. So now, right? So now they have to live on, this is going to be about 300 million a year. Now there's inflation, but now they have $300 million a year in cash flow, 3.5 billion in assets that are obviously appreciating, and now they can go and borrow 70% of that to buy more. But you notice they never spend money. They're like, hey, we got this stuff over here. We have a piece of paper that says we own something. And because of that, we have cash flow just streaming in. We don't do anything. We don't mow the lawn. We don't fix the roof. We don't paint any apartments, right? It just, money just rains out of the sky. And they're like, so because we own this piece of paper. So we would like to now use this piece of paper to buy another piece of paper that says we own that cash flow. And they're like, okay, so now you get that basically for free because this piece of paper says you can have this piece of paper. Yeah, you have to take on debt, but the renters pay for the debt. Like, you don't even pay for it. They're like, well, there's already people in the building. You understand? There's already people in the building. They'll pay the bank back. So you're like, well, okay. So now you go 2 pieces of paper and more cash just flowing in. Okay? So now, if you want to buy yourself a Lamborghini, your renters pay for it, not you. Everything's free. Everything in life is now free because you own a piece of paper. It's where you want to get. But would you sell? Oh my God, why would you sell? Why would you sell? Oh my God. Okay. Well, the reason people inevitably sell is they're trying to make a quick buck, and a quick buck in real estate is 8 years. And to do that, what they do is they put as little money down as possible, and they pay the banks back as little as possible, so that they'll do things like interest only loans. But that's like someone putting $500 into a Forex account and they think they're going to be a millionaire in the next 2 years. Okay? So your cash flow is a problem if you're not paying the bank back. So you're collecting all the money from the renters. This is how people default, by the way. They collect all the money from the renters. They pay the interest only. They only own 20% of the debt. Well, I guess it's probably closer to 30. They only own 30% of the property. The bank owns 70. And they're collecting money, paying the bank their interest, stuffing the rest in their pocket, but not paying down the loan. And then suddenly, so I know there's a 13-year cycle in real estate. And by the way, this is the 13th year. We talked about it last year. But anyways, so all of a sudden you get to this point, like maybe it's really good for the first 2 or 3 years. You own this, $100 million property. But all of a sudden, what do you do if 30% of your renters stop paying rent? Well, you've never paid down your debt. You're only paying interest. So now you can't afford to pay the bank. So you're out and the bank owns your portfolio. Okay? So not good. Not good. Not good. Not good. So you want to go in big. You want to go in not with a little bit of money. You want to have as little debt as possible so that when you get in those scenarios where renters suddenly can't pay you rent and you have low cash flow for a year, that you don't go bankrupt. Right? That's what you want. So you can survive those years because you don't want to sell. If you're forced to sell real estate in a situation like that, you're going to sell your property for less than you paid for it. So now you made a couple of $1 million a year for a couple of years, but now you lost the $30 million down payment on your $100 million property. So now you've lost your property, you've lost the cash flow, right? You've lost the 30 million, you've lost the asset, and most likely you had to sell it for less than you paid for because you probably paid too much for it, right? Do you understand? And all of a sudden you think you're a high flyer, and then all of a sudden you're $20 million or $10 million or $5 million in the hole. And there's no way out. You've lost the property, you lost the cash flow, but and there you are. Now you're negative 5M, and now you're going to try to sell your giant screen TV to raise cash. Good luck selling that TV, right? So you got to think long term. You got to think big. Cool. So we're holding up on our line. Beep, 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 beep. So, this is this is today's trade plan. I should probably update this. Sometimes I forget what you might not see. All right. So today's trade plan was to buy it around 140. Tomorrow's trade plan is to buy it at 40.50. Or whatever this is, 40.60. Now it might have to adjust. So I'll put it down to this 40.50 level. Okay. Because if it closes low, it's going to pull this down. But that's kind of what we have going here, this roll reversal. You see this? Yeah, my kid wants to buy a TV for his room. And I'm like, I get it. That's cool. And I said, I think I was 25 when I got my first TV for my room. In that case, my apartment. And I said, I'm pretty sure it was black and white because I pulled it out of a garbage dumpster. And it was like this big, right? Like, it was really tiny. It was funny. And the reason I used it is I lived in a skyscraper at that time, and when people showed up to the building, they would pick up a phone, dial a thing, and there'd be a little screen, and I'd look at them like, hey, dude, I'll let you in, and I'd buzz them in. But I never had a TV because in your apartment, it's connected to your TV, but I'm like, I'm rarely in my apartment, like rarely. And so I had to have a TV so that I could buzz people in. So anyway, so I found a little black and white one I pulled out of a garbage dumpster, and that was my TV. Hey, Toxic. Hope to see you tomorrow, man. Those days I worked so much, I would come home, sleep for 3 or 4 hours, and then go back to work. And I got into trouble because I stopped paying my power bill and I stopped paying my heat bill. And right, because I'm never there, and I'm like, didn't need it. And I live in an apartment in a skyscraper, so my logic was, I don't need lights to go to sleep. So I'd walk in my apartment. It was just pitch black. I'd light a candle in the bathroom so I could shower and pee with light, right? But the rest, I just didn't need. And then it never got cold enough in San Francisco where I needed heat, because if it got cold, the idiot above me, the idiot below me, the idiot to the left and right, they all put their heat on. So my apartment never got cold. So anyway, so I left it. I was fine. And then the building manager, after several months of me doing this, came up and he's like, I have to inform you, you're required by law to have power and heat in your apartment. Actually, it might not have been power. I think it's heat. There's some weird law. And they forced me to turn it on. But I was super happy. I don't need heat. I'll just wear a blanket. I don't need electricity. I'm only sleeping here, right? And the rest, I was just focused on work. Focus on work. Focus on work. Focus on work. Oh, I just take a cold shower. No, wait. No, but the building had hot water. The building had hot water. Yeah. The building, because it's a building. This is a skyscraper. So that wasn't a problem. But in college, I took cold showers all the time. Yeah. That's how it was. Yeah. Yeah, no. But no, I was focused on work. That's all I cared about. All I needed was to sustain my momentum. Right? That's all I cared about. Sustain my momentum. That was my focus. I owned nothing. I wasted no money. So I quit my job at Cisco Systems because I got an idea for internet business back when internet was brand new. And I'm working at Cisco Systems, which made routers and switches and stuff. And even back then, they didn't use the internet very much, which was pretty funny. So, anyway, so I got this idea for a business. And so I quit Cisco Systems and I decided to take a job in a different industry because I needed domain experience in this new industry in which my business idea was in. And so I was there, I got that job, and that company got bought out 9 months later, and I got paid 1 year's salary bonus. And I took that money and started that business, which was, right? So I had money from that and never looked back. That was it. That was it. So that money was precious to me. Everything had to go to the business. And if I could save money by not having TV, not having electricity, not having heat, all that kind of stuff, it just kept my business alive. And that was the turning point. That was it. Never needed a salary again. But that's because I was unbelievably committed and I had a ridiculous, sickening work ethic. Okay. So see, Fred, we got one right here. How do you identify? Well, okay, we looked at this. We're bullish. We identified this as support based on price action. We identified this as support for market action. We identified this support because of a psych level. So the entry, this is why we're watching this. But thank you for asking, because sometimes I forget, you might not know, and I don't know what you know or don't know, but that's why we're watching this, because I have it set. I've actually drawn it. I drew this manually to try to make it clear. Okay. So how did I do that? Price, market, psych, and bias. And bias is this way. Okay. Does that make sense? But Fred, make sure you subscribe so I can teach you more over time. I've been doing these webinars on YouTube since YouTube was a startup. Okay. And that old story goes, I was skiing in Lake Tahoe with my wife, my kids, and my mother. And I was reading a magazine article in some magazine, I don't remember what it was, but it had an article about this little startup called YouTube. Okay? And I showed it to her and I said, look, this is the YouTube thing I'm talking about, where people upload videos. I said, I've been doing this for a few months now. And so I remember, right, I remember pulling up and showing her. And I'm like, look, you type in Forex, and there was 6 pages of my videos, just me, pages. So like there was probably 150 videos up there. I'm like, look, check it out. It's really interesting now. So I can tell somebody there's a video there, and I can give them the link and they can watch it without having to download it. Okay? So that's how long I've been posting to YouTube. If you asked somebody, no one had heard of it, people would type in YouTube, which is actually probably a better name, right? And stuff like that. And it was just basically another file sharing site. This was before it IPO'd. It was before it got bought by Google or whatever that process was. It was before all of that. It was not even a Google product. Barry, we already did Bitcoin. Gold is really moving? All right, let's go back to gold. Oh, well, it's just doing what it... Yeah. Okay. So you guys should know the target here, if you're a bear, is 1650. So it's really moving, I guess, on a small time frame, but the plan would be this, right? So I guess it's really moving if you're on like a 5-minute chart. Okay. But it's only moved like $10 and $15. It's not that big of a deal. Cool. Oil's not doing anything. Kitty cat is just slowly doing its kind of thing. Bitcoin is slowly doing its thing. Let's look at the yen pairs in general. All right, 66% of you have not clicked the like button. Would you please take 1 second and click the like button? What do I think of Bitcoin? That's like saying, what do you think of sheep? Sheep are fine. What do I think about it? It's an asset on my charts. I can trade it. I don't think anything about it. Do I like it? I don't dislike it. I think I think blockchain is way more interesting than Bitcoin. So I don't think anything about Bitcoin. It's like saying, what do you think about Brent crude? I'm like, well, I know it's crude from oil from the North Sea, but other than that, I don't think anything about it. There you go. Yeah, Jonathan, if you don't know how to install the file, there's three things you should probably do. One, pay the $14 and take the MT4 trading course, because apparently you don't know how to use MT4. That's just a suggestion. I think there is a free video that tells you how to install them. I'm going to make a new version of that to show you how to put the indicator file in the indicator folder, to take the expert file and put that in the expert folder, to take the template file, put it in the template folder, take the profile file and put it in the profile folder. It's not hard, but right? But if you don't even have that, just go to YouTube. How to install EX4 files on MetaTrader, and I would imagine there's thousands. Yeah, no, just don't Google it. Just go to YouTube. But yeah, but I will do one, but not today. How do you decide a time frame? You always start high and you work your way low. Okay, make a decision. Is this bullish or bearish? Done. So let's take a look. Can you see what I'm doing? This is our plan a week ago, in fact. So we have this rolling over here. Very obviously, if you're a bear, that's the extreme pivot point, no doubt, 1,000 times over. If you're a bear, that's your plan. Okay. So, and this is all in the 4H. And of course, because you know that, you know how to trade, you also know you're targeting 57.5. So you're selling at 66.5 and you're going to 57.5. Okay? Very, very straightforward. Now, the intuitive side is, and this is what I told the trading group, is I think it's going to be an inside month. So really, you're selling at 66.5 and you're going for 61. Okay? Not even 61, 61.5. Okay? So really, that's all you're thinking. But that's a little more intuitive. But, so now, like, you're done. That's easy. It's very, very easy. So now you have to trade it. And I'm talking from day one here. So now you move off the 4 hour and you probably go to a 15-minute chart. And now you're not doing strategy, you're doing tactics. Right? Did my volume go down? I haven't changed anything. Really? Please up volume. Listen very down. Okay. So, my book is called Strategic and Tactical Forex Trading. The reason for that is that you start with strategy first, because if you don't know where you're going, you're never going to get anywhere interesting. Okay? So this tells me on the 4-hour, if I'm a bear, we know this is resistance. We know this is the entry pivot for bears. We know this is an exit pivot for bulls. So at the very, very, very least, we're planning on going there. That's the strategy. Cool. And by the way, we knew this on Friday. I know it's Thursday today. We knew this last week. Okay? But anyway, so how do you carry it out this week? Well, you get off strategy. Now it's all tactics. And this is where daily and weekly pivot points come in. This is where price action comes in. So you get things like down, 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 up, up, sell, down, 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 down. So when you make a new lower low, by the way, this is called price action. You say, okay, if we come back to this area, I'm going to sell again. So a day goes by, up, up, sell, down, 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 down. When with the new lower low, you're going to mark this. You're like, hey, Wayne, that didn't work. Well, it doesn't always work. It's just a guide. Okay? Up, up. Okay? Now, this is why we use other pivots, like daily pivots. There's going to be a sell zone there and then down. Okay? Oh, thank you, Ron. Oh, Ron pointed this out. So I turned that on. That's cool of you. You figured it. That's the first one. Ron's the first one. I turned that feature on yesterday. Well, several people asked for it. So this is, what do you call it? What do you call these things? They're super chats or something? Super chats. You can now, if I don't get your question, if it scrolls by because we have so many people in the room, you can post what Ron just did, and I obviously clearly see that you've posted a super chat. Cool. So now you can say, Wayne, will you cover this? Now, here's the other thing. Hint, hint, wink, wink, nudge, nudge. If I help you in some way succeed, maybe you put a little more and you buy me a cigar or a bottle of wine. Yeah. But anyways, that's cool. Yeah, that would be funny, Ron. That'd be funny. That'd actually be too funny. Funny how, like a clown. Yeah. So anyways, this is where we're at. Okay. Okay, you see? Now this only gets us to 63, but we have a bigger strategy than that. We're on our way down to 61.5. So we also need to plan for next week. Okay? So the swing trading group and I are meeting today at 5 p.m. to set up trades for all of next week. And we're doing group work, by the way. We're doing group work. So I'm going to separate bulls from bears and neutral people from bulls and bears. So we're going to create groups: bullish group, bearish group, and neutral group. And depending on how many there are, we'll probably have multiple groups of bulls, multiple groups of bears, and probably, I'm guessing, one, maybe two groups of neutral. And they're going to get in groups of 4 or 5 and look for trades that they can pitch the group for next week. So they're going to say, based on our risk off scenario, so let's say bearish on yens, we think this particular yen pair is going to make the biggest move next week. And here's the reasons we discussed why we believe this. And those groups are going to pitch the overall group just like a group of traders at a hedge fund. And they're going to say, like, this Aussie yen is going to drop like a ton of bricks, right? And here's reason 1, reason 2, reason 3. And here's the chart setup. And here's where the pivot is. And this is where we're going. And the target, we think this one's good for 300 pips. And then we'll move to the next group of 4 or 5 people. They may also be risk off. They might be risk on because I'm separating these groups. And then the neutral group will come up and tell us why we should be cautious on some of these things, why it may not be so clear. And that helps defeat this groupthink risk that hedge funds get. So that's what we're doing tonight in the swing trading group. That's pretty cool, right? Yeah, I moved it. If that email I sent out yesterday, Meta, I have to update the website now though. But we're not doing it at 11. We're doing it at 5 just because of the new times, and I don't want to have like every single day has a different time. So so Sundays at 5, Mondays at 8 because of my Harvard classes, Tuesdays at 5, Wednesdays at 5, Thursdays at 5. Okay. Oh, Luke has bought a mic and everything. That's cool. Correct. It just seemed weird to have so many different times. We got to have some sort of consistency, in my opinion. So anyways, that's how you trade the Kiwi yen as a bear, strategically first, and then you drop down into tactics. By the way, would you guys take a second to click the like button if you haven't already? Just click the like. Easy peasy lemon squeezy. Just tell YouTube this is quality content. That's all I'm asking for. Thank you. If you did, I appreciate that. Thank you, Pierce. All right. Okay. So what if you're not a bear? What if you're a bull? Okay. Let's do it that way. This is the opposite of the Kiwi trade. That's the exact price. And by the way, you knew this on Friday. You knew this on Thursday. You knew that if you were going to be a buyer, you're going to look for some sort of reversal pattern off of 75. In fact, it was 75.11.75 pips. So let's call it 75.12. Okay? So you knew that's where you wanted to buy. You knew it last week. It drops on the open and then creates a double bottom. That might be enough for you, or it creates a higher high. Wait for it. 1, 2, 3. Higher low, and you're long there. Okay? And if you are a bull off of that, you don't like the price action that's happening now, but these things happen. But your plan on Monday is if you're a bull. Okay? Now, the problem with being a bull low is I don't mind you buying lows, but I want you buying lows in an uptrend, not lows in a downtrend. But at some point it needs a rollover, and that would be your alpha. And you'd say, well, we held up here, so this is basically a range, and we're going to break the range. Well, we haven't broken the range, have we? But if your alpha is correct, and your analysis is correct, we're going to break it, and it's going to look like this. Okay. Yeah, the new guys are not clicking the like button. Less than half of the people click the like button. Really? Come on. It's a big deal. Click the like button. All right. But welcome, everybody. Welcome, welcome. So that whole news thing was underwhelming, which I suppose is good. Let's Let's do what? Let's take a look at the index. Yen strong, risk off. Dollar strong, risk off. Swiss franc strong, risk off. CAD down. Kiwi down. Both are risk off because they're commodity plays. Aussie a little bit strong, so we almost want to call that neutral. Pound is actually strong right now, but euro is weak. So Aussie and pound are the odd ones. So you might want to look at euro Aussie short, right? You might want to look at Aussie. Well, there's not a lot of choices here actually, because Aussie Kiwi would be an obvious play. But these are all relative strength exercises, right? Typically, what I'd like you to do is look at these indices and say, okay, risk off. So CAD yen short. That makes sense to me. Euro yen short. Kiwi yen short. Kiwi Swissy short. Euro Swissy short. CAD Swissy short. CAD dollar long. Euro dollar short. Kiwi dollar short. Okay? Those are macro plays versus Kiwi pound. Well, that's not a macro play. That's a relative strength play. Aussie Kiwi. Yeah, again, they should be the same macro. They just are not the same today. So there's Aussie is unusually strong versus what Kiwi's doing in the moment. So maybe Kiwi's unusually weak. One of the two, you don't know really which one. They both are typically affected by macro the same, but right now their relative strength is different. So you'd simply be playing the strong versus the weak, which is fine, but that's relative strength, not global macro. And usually this is short run. By the time you see it, it's already over. Just because the Aussie's been strong for the last 12 hours and Kiwi has been weak for the last 12 hours, or some combination of both, that doesn't mean it'll be that way 12 hours from now. Okay? Roger Lugo says, hey, good index exercise. Well, that's why I have these scans. Okay? So you're supposed to be able to do it without the index. That's why I don't like showing the index, because it makes people lazy. Aussie weak versus yen. Aussie strong versus Swiss franc. Oh, wait. Time frames are off. Hang on. Let's do this. Put them all hourly, maybe? Hourly. Okay. Aussie currently weak versus yen. Aussie currently weak versus Swiss franc, but there's been a little bit of up because we know that Aussie has some strength. So that means the yen is stronger than the Swiss franc. Okay? Pound is actually stronger than the Aussie, right? We see that here. So that's interesting. And Aussie is weak versus the dollar. So dollar is what? About the same as Swiss franc, and yen is stronger than the Swiss franc and the dollar, US dollar. Okay. See? And also what that index doesn't show you is Aussie has been strong. Doesn't mean it's strong now. How do you set up the scan? Okay, you create a profile. So let's create a profile. We'll start here. Let's profile a currency. Okay. All right. Let's do one. What should I pick on here? Oh, I guess we can do a one on crypto. Okay. So we have one on Bitcoin. We have one on XRP. And I don't know what the hell that is. Oh, Litecoin. All right. So this is fine. Okay. So on one profile, we have 3 different charts, each with a different currency, or in this case, cryptocurrency. You can do things like change templates, but templates only change what individual charts show. So let's say I'm bullish on all cryptocurrencies. So I decide to throw down a bullish chart. Okay. You can make any chart. All I'm trying to show you is there's a distinction between a chart template and then the combination of charts and their individual templates. So for example, let's say I'm bullish on all cryptocurrencies except XRP. So I want that one to be bearish. Okay, cool. So now I can save the combination of charts, okay, as a profile. So I go profile, save this profile as a unique profile. La di la is the what I want to name this profile. I'm going to call it la di da, la di da di, la di da di. We likes to party. Okay, la di da di. We likes to party. We don't cause trouble and we don't bother nobody. Okay, so I just named this profile la-di-da-di, we like to party. Okay, see, it's right here. So now, as I navigate, so let's go check out Pivot's day trading. So this is now a profile, and it remembers the combination of charts and each chart having a different template. And then I say, oh my God, this is going to be very meaningful to my crypto trade. So now I want to bring up la-di-da-di again, so I probably have to scroll down to find it. There, la-di-da-di, we likes to party. And it pulls up Bitcoin bullish, XRP bearish, Litecoin bullish. And that is called a profile. So each chart has a template, and the combination of charts with those templates installed is called a profile, in which I've now saved so I can bring them up. So if you want to scan the Aussie dollar, all you have to do is open up a profile, and I think you get some stupid, useless default profile. Let's do it this way. There's your stupid, useless default profile that MT4 gives you. Okay? And you can then change this by changing the currencies, changing the time frame, changing the templates, and then you would change the default template by going to profiles, default profile. You go to profiles, save as the new version of it, and now that gets added to your list of profiles. Got a pocket full of pips and my homeboys do too. What you gonna do? What you gonna do? Yeah. Anyways, yeah. So I can't believe it still. 50% of people refuse to click the like button. Amazing. In fact, 2 people just removed their likes. Huh. It's really that bad, huh? Reb's got it, though. All right. Well, if I'm losing likes, maybe I'm bothering people. Maybe I'll shut her down. We don't cause trouble and we don't bother nobody, cause... Yeah. All right, so here's a yen yen. Here's a yen yen. Okay. Here's a yen yen. How do you trade as a bull? Here's the buy zone. Okay. Here's the buy zone. Here's the buy zone. And here's the buy zone. 1, 2, 3. This is what you do over the last 4 weeks as a bull. Down, 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 right? Buy. Up, 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 down, down, buy. Fizzle, fizzle, fizzle. Up, 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 down, down, buy. And one would think we're going to be up here next week. Yeah, that's true, Forex student. Many people did not enjoy the Crusades, for example. Right? Have you guys ever studied Saladin? An amazing warrior from the Middle East. Amazing. Yeah. Well, because Saladin was Middle Eastern, you know, your good old European white boys have never heard of him. But he fought against the Crusaders. Yeah. Anyways. Carlitos. Yeah. Well, everyone did. Can you imagine? There was a time when British troops in Egypt, while they were bored and passing time, would fire cannons at the pyramids. You're like, yeah, let's shoot the pyramids. Or how about men crossing Canada or the United States on these long train journeys, and to pass the time because of sheer boredom, they would take out their rifles and shoot buffalo as the train went by. Just shoot them as the train goes by. You're like, yeah, that's fun. Let's shoot some buffalo from the train. You're like, what were people thinking in these moments, huh? Kiwi dollar? Sure. We don't practice Santeria. I ain't got no crystal ball. I had $1 million. I'd make 5 million more. All right. So you have permission to be a bear tomorrow or a bull right now. Which one are you? So I got a request. I don't know how to pronounce your name, but I got a request to cover Kiwi dollar. So from what point of view do you want me to cover it? As a bull or a bear? Santeria. Okay, to the person that asked the question, are you a bull or a bear on Kiwi dollar? Inception, both. Well, okay, but I still want the opinion first. Okay, that's fine. But don't be sorry. You have to tell me, though, are you a bull or a bear? Delhi. Delayed. I don't know what that is. Delay. Name first. Okay. Okay, Deli, are you a bull or a bear? Inception says, I don't know. Well, you have to decide, are you long-term or are you medium-term? Okay. Are you long-term or are you medium-term? Okay. Don't tell me okay. Tell me if you're a bull or a bear. Come on, man. It's not complicated. Come on, Deli. Thank you. Okay. So you are set to sell this tomorrow. Done. Cool. Anybody else? Oh, someone wanted to be a bull. Okay, fine. Let's take that down. Let's change the template to be bullish. Okay. So you want to be a bull. Not today, not tomorrow. Done. Okay. That's it. You're out of position today. You'd be buying a downtrend on a daily basis. Not today. And if you're a bear, tomorrow. Yeah, my pleasure. But that's helpful though, right? Yeah, baby G, I'm bear. Yeah, that's all right. But boss lady doesn't mean she's naked. That's right. USD gold, I thought we already did. I'm a fox. Yeah. So again, I've shown this over and over and over again. This isn't bullish or bearish. So one way you can kind of look at it is this. Okay. It's not very interesting at the moment. Another way of looking at it is this is the sell zone. This is the buy zone. And nobody's making money. No real money anyways. Eventually it'll break, but I don't have to be the one that breaks it. So let it break. So most likely what it's going to happen is it's going to go into the apex of the triangle and then pick a side. Okay? So the thing with a wedge or a triangle is the closer to the apex, the more reliable the breakout. So you're looking for an apex breakout. An apex breakout, okay? That's what you're looking for. Often, if it breaks in the middle of the wedge and nowhere near the apex, it's a fake out. So write that down. No, it's not Mr. Mustard, it's Colonel Mustard. In the library. With the revolver. Cool. All right. Would you like me to cover another pair? I got another 15 minutes to go. How can I help? Gold. Okay, that one I'm pretty sure we covered once or twice, but we can go back. Why not? Everybody loves gold. Yeah, get that gold out of here. I don't like gold. Like, everybody likes gold. What are you talking about? Here's some gold. Thank you. Can I have some more gold? More gold, please. Okay, cool. So let's do it all over again. Okay, a bear. This is a bearish sell zone. Well, actually, I should take that back. This is a bullish exit. Okay. That's the first part you need to know. It's just like this. This was last week's bullish exit. Okay. So if you're still a bull, you're looking to re-enter. So the standard operating procedure for a bull is up, 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 exit, down, down, buy. Up, 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 exit, down, down, buy. Up, 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 up. Okay? That's for bulls. Now, the bearish side of this trade is off of the second touch, and they're trying to head this down, okay? But before you can bring it down, bulls will challenge you because that's their trade plan. So a bull is going to challenge you first and foremost off of the 4-hour 21 EMA. So you got to take this. Remember, it's a moving target, so you got to push it. You got to push it, right? This way. So you know for a fact, if you're a bear, even if you sell here, that's the exact price. Okay, we knew that. $1,740.50. We knew that a week ago, guys. It's not surprising at all. But if you're going to trade a double top as a bear, you also need to know you're going to be challenged by bulls around this price level. Okay? If it breaches, then we're heading down to the future 55. The future 55 is going to move right, but also up. So this is what it'll look like in the future. And if it goes that far and bulls are correct, remember you got to adjust your lagging moving average. Moving averages are lagging. So now I got to redo this one. So this one would then, if it was breached, start to do this. Eventually get a crossover, right? So going back to what a bear would do, a bear would assume an upward move, a downward move, and then catch this crossover, so this will roll over, back into this future 21. So now I got to add that to now. Now we're off the chart, okay? But an up and a down, and there's next week's trade plan. So it'd be a Thursday down, a Friday Asia Open up into a London Open on Friday down, a little fizzle off of New York, and this would drop next week's pivots. So therefore, Monday, probably around London Open, you'd be selling a retest at 1,700, and it would bring it down to about 1,650 bucks. So that's today, tomorrow, and next week. Easy peasy, lemon squeezy if you're a bear. Now, if you're a bull, you're like, that's nonsense. Okay? Bulls have it figured out, and it's way easier if you're a bull. Up, 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 down, down, buy. Up, 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 down, down, buy. And we're going to be up next week on our way to 1,800. Done. Easy peasy, lemon squeezy. In fact, the buy zone currently for bulls is between 1,700 and 1,715. And the target, and the target next week for gold bugs, gold bulls, they're going to take it to 18. That's it. Ride the 5 all the way. Now, here's the interesting thing. If you're a bear and we had it planned coming down next week, here's the cool thing. That's what we just planned for bears, right? On a smaller time frame. Check it out. Bulls will buy that and fire for effect, and they're still going to take it to 1,800 next. Okay? They're going to kick off the daily 21 EMA. They're going to kick off the bearish exit zone and this roll reversal, and they're going to take it north, and either way, they're going to go to 1,800. It just depends if they're going to do it this and then down, or down and then up. Nice. Huh? Can I get a like for that? That was nice. Okay. Are you okay with that? That was nice. Can I get a like for that? Again, 50% of you haven't even clicked like. So I apologize that this sucks so bad. You're like, I can barely watch this, but click a like? Forget it. That's way too much effort. Okay, can I have another currency pair? USD ZAR. And I ran so far away. So we got taste for exotics. Let's do that. Exotics, exotics. So we had a trade plan on this yesterday in the live group. And yesterday we said we want this to come down and we would be buyers. Boom. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, up, up. Okay. Off of this stabilization zone. And one of the things I talked about in the live group yesterday was, in particular to all of my South African brothers and sisters, trading like this is a form of hedging against your own rand, which is deteriorating. So one way to maintain your wealth is to trade it up. And I did a review of smart beta hedging strategy. How many people were there for that? Hedging. How many people were there for that? The smart beta hedging strategy of the South African rand. Yeah. Cool. That's where we get deep, man. Deep in the weeds. Dive, deep dive. Bring your scuba. Ricardo caught it. Nice move. Now, be careful on this time frame. It's suggesting a double top around 18.8, maybe as low as 1875. So be careful there, which just means kind of manage your stop and then try to be confident enough to let it run through. Okay. Cool. Thank you, Jim. Thank you, Anthony. Get rid of that scumbag. All right. So here's the thing. Up until that test, down, and then up tomorrow. So I think we're probably 2/3 of the way through today's up, and then there'll be a drop, and then over here. If not, then tomorrow is going to be down like this. And the run, that'll be risk on. Okay. All right, 419 people watching, 233 likes. I don't get it. I just don't get it. I'm even asking nice, right? I'm not being rude, am I? Would you please click the like button? Please tell YouTube that this is quality content. That's all I'm asking you. It's not going to make me money. It's not some sort of scam. I'm just asking you very politely, would you please click the like button and tell YouTube you find this to be quality content. Okay, would you please? Just take you less than 1 second. Just click the little thumbs up thing. I appreciate it. Thank you for your time. Thank you, Tyler. I appreciate that. Okay. Not that many, Jimmy. If you're watching on a video player on a different website, maybe in the bottom corner where it says YouTube, if you click that, it'll bring you to the YouTube channel, and maybe you do that. Click it from there. But Ruben says, thank you, Wayne. Learned Apex fake out, breakout, profile charting. Great video. Right on, Ruben. My pleasure. So we had, what, a pound Kiwi, I think somebody asked for. That's not one that I typically trade. So, but it might be on my Kiwi scan. What was it? Kiwi, pound Kiwi? Pound Kiwi, huh? Well, I got to add that to this profile, so I can do it this way. Insert new chart and pound Kiwi. Great. So this is a new chart on the profile, and you can see it's the default template, which is useless. So I'm going to change this now to a confluence. So now I got this chart. I'll move it to a 1 hour on this profile. Now I got to set this up so it looks a little prettier. Boy, that didn't help. How about window tile vertically? Okay. And I don't, well, we'll leave that one. So now I got 1, 2, 3, 4, 5 charts on this profile. And it will remember this profile. So every time I come to scan Kiwi, it'll look like this, including this ugly thing. It's just something I was testing. Okay, but anyways, let's go back. So somebody asked about pound Kiwi. Okay, good. First of all, on Monday, well, let's do this. 2 weeks ago, somebody sold at the exact correct price. That's exactly where a bear would sell. Okay? And this is exactly where a bear would exit. And we knew that the whole entire week. Okay? So where that bear exited, okay, this is a monthly price for bulls, and this is the weekly price for bulls. So on the first minute of the first day of the new week, they were able to get in their monthly trade plan. And you'll see if I click in, there was a, right? There was, let's redo all of this now. This is where bears exit. This is where a bull would buy. And then up, 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 higher, high, down, down, roll, reversal, entry. So there's a second trade there, first trade there. Target for this week is this zone right here. We knew that Friday. So here it is Thursday, and we're hitting it. Now, if we hit this on Tuesday, I would expect a counter trend on profit taking, but we're hitting this late on Thursday, so I expect a dip and a rally. Now, the dip rally scenario could be today, it could be tomorrow, so it might have been this already, or it would be Monday. We don't know, that's why you got to do your job. Okay? The 55 suggests a little more up, and then maybe down Friday, and then maybe you buy it back on Monday. Okay? Other things you need to have on the clue train is this. But you should be aware, even if you're a bull and you saw bears leave here, you entered here, you entered a second one here, you entered a third one here, you entered a fourth one here, and you entered a fifth one here, you should know that you're at an exit already. Now, it doesn't mean it can't go higher, but it means you need to manage your risk appropriately because the risk has increased. And you knew that last week. You knew that in this zone, that if you were a bull and you started buying, that this would be where you start to take your profit. Or jam your stop, jam your stop, jam your stop. Because this might be a monthly play for you, not just a weekly. but all your monthlies start with weeklies. So the overall plan would be start here, M2 to M4, central pivot to R2, and now guess what? Typically we're supposed to go up here, but this isn't typical. So like what I told people last week in the live trading group is you want to treat this as an inside month. And I think that's going to be if this goes up. So if you're a bull, you do believe it's going to go up, right? So if you're a bull, I'm going to tell you that under these market conditions, what I've seen based on the last 4 or 5 financial crises, the top of April for a recovery month would be an inside range, which means you'd probably get out around this, let's call it 2.15. Maybe even 2.14. Let's do 2.14. Okay? So I'm taking standard operating procedure for a bull. Like you can do this as a bull all day, every day. If you know how to trade, this is like stupid straightforward. Okay? But the finesse here is to say I'm going to supersede the standard operating procedure and I'm going to use a little bit of experience here and I'm going to say this is the monthly bottom for April. This is the monthly top for April. And I'm making a judgment call from experience that this is an inside month. And I wouldn't normally do this. Okay? Just like I'm going to tell you September is going to be an outside month. You understand? So if I know, I'm telling you right now, September is going to be an outside month. And the high for September is going to be monthly R3. I know it's April. I'm telling you, September. Mark my words. You can write it down in your notes. The top of September is going to be MR3. Now, here's the thing that would make me wrong. Because this is the 4th year in a 4-year political cycle, we might not hit this. If it was last year, yes. The year before, yes. The year before that, yes. So now adjust. If you marked it down, now adjust. Normally, September is an outside month. MR3 would be your target, except on political cycle years. So now write that down. So now the top of September won't be MR3. It might be, might not be. And the volatility that one would normally expect is going to be deferred and delayed till November. So now I'm telling you, normal and the abnormal, make sure you understand the difference between the two. This is a recovery month. And in this situation, in post-crisis mode, I expect an inside month. Done. Now, normally April is not an inside month. Isn't that cool? So I'm thinking ahead here. I'm thinking ahead. I never log into my charts and say, what's going to happen today? Today? I did that yesterday, bruh. Okay? So what are we talking about like for now? Well, it can go up, open out a position, and next week this comes down. More likely it comes down, and then it goes up, and then comes down. Those are the two likely scenarios from a bullish point of view. If you are a bear, typically what you would do is you would mark it this way and say, well, all of this is clearly resistance. Okay, well, if you're a bear, then set it up. How's it going to work? How are you going to trade this as a bear? Well, as a bear, it's going to come down to the 21. That's a 21. That means it will go up. So then it'll go up and it'll hit 2.10, which is also an M3, which will bring it down to the buy zone. Bulls will buy that. It is a buy zone. It'll come up. It'll hit the monthly central pivot. It hit the roll reversal, which now I have to mark with blue. And then a bear is going to take it there, down, get through the M2, destroy any bulls that are left, and we're going to end the week down here, which is the bottom of an inside month. So it's an inside bottom. And of course, this is, right, would end up being the top. Although typically you'd want this a little higher.